Hey parents, you don't need the latest gizmo slang or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You still thinking job change in the new year?
Yeah, I need something that's in high demand and more stable in this economy.
IT?
Yeah, cybersecurity, maybe even AI.
That's what I did.
Really? How?
Went to My Computer Career. You don't need any prior experience, and you could start your new career in a matter of months. A lot of IT pros go to school there, too, to level up.
Sweet. Are classes online or on campus?
Both.
Wow, I'll check it out. Thanks.
Make this your year. Take the free career evaluation now at mycomputercareer.edu. Financial aid is available for qualified students.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like, you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Day after the Fed meeting, and we are trying to fully digest exactly what Jay Powell and his purple tie told us yesterday. It's Chuck, Mike, and Tucker with you. And Mike, I think quite honestly, if we were to go back and listen to what Paul Lane and I were discussing, I think it was almost exactly what the Federal Reserve showed in their summary of economic projections, where basically they said, hey, we think GDP is going to come in a little bit weaker than we expected, 1.7% versus 2.1% that they predicted in December. Paul and I said, yeah, something in the high ones is probably where you'll land. Unemployment, we said, yeah, maybe they show it ticking up a little more. They did, up to 4.4% this year from 4.3%. PCE came in at 2.7, core at 2.8, and so, again, I'd like to say that I don't want to toot our own horn.
But you do.
I do love to toot my own horn. And Paul and I freaking nailed what we thought the Fed would say yesterday about where they think the economy is going to go. They're basically telling you, hey, economic growth we now think is going to be a little bit slower this year, but not recessionary. And inflation is going to be a little bit higher this year, but not crazy high. And as a result, unemployment's going to go up, a marginal amount more, nothing, huge, but a touch more. That's what they told us in their summary of economic projections. Jay Powell, during his press conference, I think pretty much gave us the same answer over and over again, which is, hey, we're 6 weeks into the new administration, or 8 weeks in, and we still have to see how these policies are going to play out before we decide to make any moves in either direction.
Yeah, I was going to ask that. Did the comments in your mind, and I listened to most of the Q&A, did the comments from Jerome Powell in your mind contradict or further anything from the actual SEP and the release at 2 p.m.? Because you did see, equity markets were up for the day anyway, but starting around 2:30 really surged upwards and brought us into the close a full percentage point higher than where we started the day. What about Jerome Powell's press conference, I guess, reassured investors in your mind compared to just the release itself?
I don't know. I don't think Powell said anything particularly notable, quite honestly.
Yeah.
I mean, I always listen to the whole thing, or as much as I generally listen for 45 minutes, and then if I see any big moves after I stop listening, I'm like, okay, let me see what he said. Just because more often than not, it's him repeating the same thing 20 times in response to different questions that he gets.
Yep.
Things that I wrote down in terms of his quotes here. Very difficult to have a precise assessment of how much inflation is coming from tariffs and how much from other sources. Surveys are suggesting that tariffs are driving inflation expectations, The right thing to do is to wait for clarity on what the economy is doing, simply because we don't know if the hard data will catch up to what the soft data is telling us, things that we've talked about on this show as well. We should start our own central bank. I don't know how you just go about starting one, but we should try or something. Let's see. The costs of waiting to do anything are manageable, given that the data we're seeing from the economy is still solid. Again, this gets at something that we've talked about on the show, which is, yeah, the data may start to deteriorate, but to this point, you're continuing to get, no major deviations from what you had previously. This trend, by the way, continued this morning with initial jobless claims coming in at 223,000, a very modest uptick from 221,000 last week. The continuing claims came in at 1.892 million, up a little bit from 1.859 million last week. Existing home sales, better than expected. Part of this is the seasonal adjustment on this, because last year was 29 days in February, this year was 28. So you came in at an annualized rate of 4.26 million. You're probably not going to be at that next month just because of how the seasonal adjustments work on this stuff. But that was better than expected still. And so I think we still have a situation where, as Jay Powell said, a few times, hey, there's no real change in the data to this point that we're getting. The surveys are suggesting people are nervous about a worsening, but it has not yet materialized in the broad-based data that we've been getting.
He was asked specifically about a removal of a sentence from their SEP about the equal balance of risks on inflation and recession. But when asked about it, he said, no, we still basically see those as equally weighted, but both of them perhaps are more severe. That wasn't the sense I got from the responses during the press conference. My sense from everything else that he said was that the chairs of the Federal Reserve, the governors of the Federal Reserve, are more concerned about recession right now than they are inflation. Was that your takeaway as well?
I don't know. I get the sense. So I'll quote here, because this is one of the things that I did write down. There can be situations where maximum employment and price stability are in tension. So basically saying, hey, we're feeling pressure on both sides of that. And we say that we'll manage, and we have a plan for how we'll manage based on how far each one is from its goal. So let's say that unemployment goes up to 10% and inflation goes up to 4%. Fed's going to cut because unemployment's the bigger problem. Likewise, if unemployment goes up to 5% and inflation goes up to 10%, Fed's going to hike because inflation's the bigger problem. And he said, and how long it takes to get back to those goals, since our tools can only work in one direction at once. By the way, we do not have a situation right now where we feel that there is a conflict between these things. And that, to me, I can't remember which way you thought he was leaning, but that to me was more, hey, we're not cutting right now because we still have inflation a little bit higher than we want it to be. And even if we might be worried about where unemployment goes, it's not a problem today, so we're going to continue to focus on the inflation side and not cut further, than we did last fall when maybe they jumped. I think they probably regret going 50 bips in 50 basis points in September and wish they had just gone 25, 25, 25. But when Jeremy Siegel is yelling for you to do 150 basis points in cuts in a week,
pressure's on, baby.
I get it.
How about the word transitory is back on the table?
I love it. I love that the word transitory is permanent.
So Craig Torres, that's pretty fun. Craig Torres from Bloomberg asked the question, and he basically said, look, you screwed up last time in the use of the word transitory.
Yes.
And so why are you using it again? That was the gist of his question. I'm summarizing, and he was nicer about it, but that was the gist of the question. And I think if I'm putting myself in Powell's shoes here, I think his answer is yes, we are thinking about this inflation as transitory again. And if he's being really honest with himself, I think it's probably that, hey, they were kind of proven eventually right on the transitory discussion back from 2022. They just understated just how severe it would be in the short term.
Well, I don't
That's
know
a
if
lot
it's
to
the
digest.
Severity. I think because the problem people had with transitory is I think people thought like, hey, this will be 3 to 6 months, and instead it was 2.5 years.
Right. And they also thought it would be like 4.5% inflation. Instead it was 9%.
So there were some problems there. I mean, look, I don't want Jay to start having to make up new words and everything. This is one of those places where I wish he would just not say anything.
Agreed.
And he's pretty good at not saying things. Like he could be asked, hey, how long do you expect this inflation to last? well, we're still looking to see, exactly what policies get put in place and how and what their impacts may be, and we'll assess as we go. Like, you don't need to get into transitory.
Would you like the best example of Jay Powell not saying anything?
I know what it is already.
The reporter from the AP asked him, quote, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could be a kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board? Here's Jay Powell's answer. So I think I did answer the question in this very room some time ago, and I have no desire to change that answer, and have nothing new for you on that today.
And then, by the way, the
It was
reporter
basically
goes,
just, shut up. Stop asking that question.
The reporter goes, okay, I'd like a mulligan on the question. and honestly,
which you don't get. No, you have to sit down after that response.
First time I've ever seen Jay Powell laugh at a press conference. It was kind of weird. It's kind of like, when you're a kid and you see like your teacher at the grocery store and you're like, oh, I didn't know you existed outside of the classroom.
Right.
It's kind of like that, seeing Jay Powell laugh.
Yeah.
You're like, oh, like, I didn't know you had that in you, Jay. But, overall, I don't think that we got much from this meeting, which is what you would expect. Again, the economic data has not really changed in the last 8 weeks. There have been some stuff around the edges, but nothing crazy that we've seen. The stuff that he said about, hey, the soft data is bad, but we're going to, wait to see how the hard data catches up, or, does the hard data catch down, or does the soft data catch up, I guess is how you could phrase it. And from there, we're going to have to see how things go. And clearly with the summary of economic projections, the Fed says, yeah, we think this is going to result in some lower growth and higher inflation. But it also feels like it's kind of a low confidence read, and that's fine. Like I'm okay
which
with
they acknowledged. They said,
right,
our confidence is shot because this is really, really difficult to read right now. They didn't say our confidence is shot.
Yes,
they just
that would
said,
have been bad.
They just said uncertainty is extremely high right now. And that's the right acknowledgement to make.
The quote that I took from them was, it's hard to say when we'll have a forecast that we can trust. Okay, fine. Like
that's Fed speak for confidence is shot.
Yes. It's basically, we're not sure what to do, so we're just going to wait and see. And by the way, that's fine. The Fed can just wait. Most of the time, the Fed is better off just waiting and seeing. Occasionally, it's the wrong move, but usually doing nothing's the right thing when it comes to the Fed.
So conclusion, equity markets up yesterday. Fed still thinking about 2 rate cuts this year, but much more uncertainty than where they were in December of last year. They think the risk of both recession and higher inflation is now higher than they did just 3 months ago.
Let's take a quick break. When we come back, yesterday or last night, President Trump saying, hey, Jay, I want you to start cutting rates. We'll talk about why he's saying that and what it means going forward.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Mike, so yesterday, I think it was around 10 p.m. or so, I don't know the exact time, but President Trump, in a social media post, said, quote, "The Fed would be much better off cutting rates as U.S. tariffs start to ease their way into the economy. Do the right thing. April 2nd is Liberation Day in America." So, again, very publicly saying, yes, I want you to cut interest rates. And a couple things on this that I think that I take away from it. The first is, I think that what I am seeing is, like, from whether it's from the three main players in the administration on the economic side are Trump, Lutnick, and Besson. And it's pretty clear to me from all of them that they're almost trying to, and I know this sounds kind of weird, and this, they're almost trying to jawbone the economy slower, which is a weird
scare us
thing.
into recession.
Kind of. And the reason that I say this is normally if you ask like a Treasury Secretary, hey, are you worried about the economy going into recession? The answer is no, like we're not worried about it. Now you get, well, we might see one, but we'll just have to see how it plays out. Like, when have you ever heard that from a Treasury Secretary?
Yeah, we've talked about that a lot. You have never heard that ever from a Treasury Secretary, like acknowledging publicly, or the president, that their policies that they are putting into place may cause recession. And I think I'm trying to get the read on that. Maybe it's a thinking that, hey, if it happens early on, we can still pass this off as the prior administration's fault and a means to an end, whereas if it happens a year from now, it's firmly in our camp, I guess. I'm not sure.
So I think that the read as far as, what they're trying to do, I think I have a pretty good handle on it, in that they want rates down so that basically the playbook to try to fix the economy the way that they're viewing it is, hey, we want to reduce fiscal spending so that we're not running 7% deficits. But if we reduce fiscal spending and rates are still high, it's a huge drag on the economy. So we want rates down to potentially stimulate the economy as we're attempting to cut the deficit to hopefully provide enough boost so that the economy doesn't go into any kind of meaningful recession. And on top of that, we can then take the existing debt that we have out there and try to, either as it comes due or, in some kind of renegotiation, say, hey, we can get lower interest rates and term out the debt to longer term to reduce interest expense and fix things on that side. I think that's very clearly what they're trying to do is reduce annual outlays as a percentage of GDP and reduce interest costs, and also through that reduced interest cost, offset what would otherwise be some potential weakness in the economy.
Yeah,
it's a really ambitious attempt to try to restructure the way the U.S. economy is set up right now. I don't know if it's going to work or not. It might, and we might be sitting here 3-4 years from now being like, wow, this is crazy. Like, I can't believe they pulled this off. And we might be sitting here 3 to 4 years from now going, well, that didn't really work. Like, back to the drawing board. We'll see what we can do next. So I don't know, but I think those are the pillars. When you hear from those three guys, the other one who I think is involved, and you can read his white paper on this very topic. His name's Stephen Miron, and he put something out maybe a year and a half ago, like on this very topic. He's now running the Council of Economic Advisors for the president, and it was specifically talking about tariff implementation and lowering debt costs and all these things together. I think the playbook is out there for what they want to do. It's just a question of, is it going to work or not? And I don't know. It may not, and we'll have to see.
Yeah, I think the playbook, especially on the government spending side, like, you could make a pretty compelling argument that the only reason we didn't enter into recession in 2022 or 2023 was in large part because of government spending. And I think there's plenty of people that would argue that's not a terribly efficient use of taxpayer funds. I'd rather see the private sector play a bigger role. And I'm on board with that argument. And so, yeah, if you reduce deficits, reduce government spending, there is a possibility of an economic slowdown, and lower interest rates and lower taxes would help that out. So I'm with you. I understand that argument. Where the entire thing gets much more muddied and where business executives, I think, are questioning it a whole lot more is around the tariff side. Because there, I don't see the same clear path of what are we trying to accomplish here. And so that's the piece that I remain confused on is, okay, when it comes to the strategy of tariffs on China, how does that differ in terms of what we're trying to accomplish to those on Canada, Mexico, Europe, etc.? And I think that's where you hear the loudest cries coming from the business community to say, okay, we get what you're trying to do in the government side of things. We might disagree with the tactics you're using, and we might have issues with that, but we can, I think, read into what's trying to be done there. On the tariff implementation side, I think you have a lot of CEOs raising their hands and saying, do it or don't do it, but tell us what the end objective is and give us some sense of where these are going to be over the next few years, because otherwise we're just going to put our hands up and do nothing.
Right. Here's the thing. And again, like, I don't know. We don't know how any of this is going to play out on the tariff side, but you don't make long-term decisions to relocate production to the U.S. based on short-term tariffs.
Yep.
Like they would need to be in place for an extended period of time. And if so, then you can say, okay, I'm going to build this factory because I'm going to, have X level of protection, and I can expect to be able to, have it be profitable once it's completed. If that's not the case, then you wouldn't necessarily see that. So I think there are a lot of balls in the air right now, and I know it's boring to hear me just continue to say, look, we're going to need to see how it plays out, but we are. Like, it's going to take some time to see how this all unfolds, and we'll see what happens. Let's take a quick break here. When we return, we've got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have
each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are extending their gains from yesterday's rally at the moment on the heels of a Fed meeting and commentary from Fed Chairman Jerome Powell. Right now, the Dow is up by about 0.5% or 195 points. S&P 500 up by 0.4% or 23 points. And the Nasdaq is up just over 0.5% or 97 points. Russell 2000 edging 2 points higher. 10-year Treasury yield is down by 5 basis points at 4.20%. And crude oil up about 1% higher, trading just below $68 a barrel. Big news in the sports world this morning impacting a local Boston sports team after Bill Chisholm, managing partner at Symphony Technology Group, has agreed to purchase the Boston Celtics from the Grousbeck family for a valuation of $6.1 billion, marking the largest sale for a sports franchise in North America. Meanwhile, Tesla announced it was recalling more than 46,000 Cybertrucks due to the potential for an exterior panel to fall off while driving. Tesla stock is actually edging 0.25% higher. Elsewhere, shares in Temu parent company PDD Holdings up by 1.5% after the Chinese e-commerce company reported lower than expected earnings in the fourth quarter. The recent quarter also marked the company's slowest quarterly revenue growth since 2022. Darden Restaurants posted mixed quarterly results, beating on earnings but missing on revenue expectations. The parent company to Olive Garden also saw its comparable restaurant sales increase less than expected. However, that stock's seeing a nice gain today of over 7%. Building products distributor QXO agreed to buy Beacon Roofing Supply in a deal worth about $11 billion, including debt. That stock up by 8%. Boston Beer shares up by 4% after Citi upgraded the stock to buy from neutral, saying this year could bring a return to volume growth for the Twisted Tea and Truly parent company. Cava up by 5% after the Mediterranean fast casual chain was upgraded by JP Morgan to overweight from neutral. Online used car retailer Carvana upgraded by Piper Sandler to overweight from neutral, where the firm said Carvana is insulated from tariff threats and is now in position to grow. That stock up by 9%. And after today's closing bell, we'll see a few noteworthy earnings reports from FedEx, Nike, and Micron Technology. I'm Tucker Silva, and that's Wall Street Watch.
Mike, we had a piece in Bloomberg talking about what we're seeing in the energy sector so far this year, and it points out that out of the 11 sectors in the S&P 500, energy stocks are the strongest performing. Now, they have some strange bedfellows right now because the top 4 sectors at the moment are energy, healthcare, utilities, and materials. Those are not things that typically go together. Energy and materials, yep. Sure. Healthcare and utilities, sure. But not usually the 4 of them together. And so one could, ask the question, what the heck is going on here? And the answer, if we're being entirely honest, is I don't really know.
Yeah, well, especially, too, I'll point out that is on top of oil prices being down for the year.
Right. Oil prices have fallen, and yet energy stocks have risen.
Not substantially from the beginning of the year, but oil prices did get as high as $80 a barrel on West Texas crude back in January. They're now sitting below 70 and have been lower than that. And so it seems to me that there's a bet being played on, they're cozying up to this administration, which is definitely true. I mean, there was a meeting just yesterday about, drilling and different objectives. But I think the lesson from the first Trump administration was that, hey, loosening of policy and restrictions around drilling is not always great for oil companies.
No, if you end up with lower oil prices, that can in fact be very bad for oil companies, even if it might be very good for us driving around on a daily basis. Interesting things, just when you're looking at kind of how different sectors have played out so far year to date. Worst performing sector year to date, consumer discretionary, followed by technology. So again, the stuff that's kind of worked the last 2 years is the stuff that is lagging the most.
Would consumer discretionary include, I know it includes Amazon, does it also include Costco and Walmart?
No, so those fall into the staples bucket. If you're looking at discretionary and what's in there, it's Amazon and Tesla that basically make up the vast majority of it inside of there.
That sector's struggling.
And so, no surprise on that front. The fascinating thing, and again, this is as of yesterday. So as of yesterday, those two were the only two sectors of the S&P 500 that are down for the year. Every other S&P 500 sector, all 9 of them, positive year to date. Actually, no, I'm sorry. Communication services is also, it looks like, just off a touch. No, communication services up 0.25%. Sorry, I was just eyeballing it. So you've got 9 out of the 11 sectors up for the year in the S&P 500, but it's down more than 3% because those two sectors make up such a big chunk of the overall weighting. You might be like, okay, how much of the S&P do they actually make up? The consumer discretionary sector is about 10%, so it's not huge, but tech is still 31%. And so those two sectors combined are 40% of the S&P, and when one of them, the bigger one, is down 8%, it creates a lot of drag when a third of the S&P is down almost 8% for the year, and that's how you've gotten what you've gotten, so far this year with U.S. equity market performance. So kind of interesting that, we look at this year and you're like, hey, the S&P is down 3, and then you take a look under the hood and you're like, oh, 9 out of the 11 sectors are up, but the big guys are the ones that have been struggling, and they've just created enough drag that the overall index is in negative territory.
Yeah, that Mag 7 group very much struggling this year in the face of this uncertainty. Let's go back to the energy sector for a minute. Play out a best case and worst case scenario for this sector, if I will here. I think on the energy side of things, you could very much see a friendly administration to domestic drilling and exports of U.S.-produced energy products, such as nat gas, right? I could absolutely see nat gas exports working their way into some sort of trade deal, depending on where this all goes. On the negative side, these oil companies that operate here domestically have a lot of exposure to Canada. They have a lot of exposure to trade generally and need things like steel and aluminum to, drill more oil and get to that place. And so there was a meeting yesterday at the White House with the Trump administration and oil executives, and that was the focus. It was really on, hey, what are these tariffs going to look like on Canadian-produced oil, on aluminum and steel that we need to build pipelines and
sure,
do what you're asking us to do. I would tend to think, again, this is a sector that the Trump administration has looked at favorably, and so if there were going to be carve-outs for any one sector, I guess I wouldn't be shocked to see it carved out on the energy side.
No, the question then still remains, look, lower oil prices typically push energy companies to drill less just because, just from a pure, dollars and cents perspective, it makes sense. And so, again, the question is, you've got these two things where you say we want lower energy prices but more domestically produced oil. Can you have both of those at the same time? Historically, it hasn't been the case in the United States. Normally, lower energy prices means you're importing more from overseas because domestic producers are higher cost. The U.S. is never going to be able to produce oil as cheaply as Saudi Arabia.
Right.
It's different processes. There's some major differences, obviously, in terms of what you're doing there. And so I think that these are the questions that we're trying to sort through. And quite honestly, as to the answer of how does it affect energy stocks, I'll be the first to say I have absolutely no idea. I mean, as Mike said, earlier this year, oil prices were up around $80 a barrel. And if you look at the S&P 500 energy sector, it was basically in the same place then that it is now, with oil prices being 15% cheaper.
Mm-hmm.
So it's not even something where you have a direct one-to-one correlation in short-term periods of oil prices to energy stocks. And so even if you know exactly where oil's going to go, which,
good luck.
First of all, can we talk? Because I don't think anyone knows exactly where it's going to go. And second, even if you know exactly where it is going to go, how do you know how exactly it's going to impact energy stocks and their prices? because there's not always the same relationship there. So a lot of complexity as you try to navigate what's going on that side of things. Let's take a quick break here. When we return, let's talk a little bit about Europe. Everyone's talking about Europe now with the announcement of potentially some new fiscal stimulus and things like that, focusing on their defense and infrastructure. Let's talk about fact or fiction when it comes to the resurgence of the European economy.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Financial planning is hard enough. That's why having the right advisor on your side is so important. This is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called What Can a Financial Advisor Do for Me? It's available by calling 800-393-4001. The guide discusses a variety of areas where an advisor can help you, from developing a plan that may achieve your financial goals to giving you the peace of mind necessary to handle consistent market volatility. A skilled advisor is much more than a money manager, and we wrote this guide to help you learn about the variety of ways that an advisor can serve you. The economic climate today is challenging to say the least. If you're in need of a financial professional, call us today and get your new free guide called What Can a Financial Advisor Do for Me? That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Hold the obituary. Europe comes to life as U.S. stumbles. This is the piece from the Wall Street Journal and Greg Ip. I'll quote here. Europe's economy and markets had underperformed the U.S. for years. Now, a newly inaugurated President Trump promised to sledgehammer Europe with tariffs while juicing U.S. growth with lower taxes, less regulation, and cheaper energy. As usual, the Davos consensus got it wrong. Since then, the moods across the Atlantic have switched places. European stocks are up nicely while the American market has had a correction. And on Wednesday, the Federal Reserve officials revised their outlook for inflation up and growth down.
Given, Chuck, that we have that plus the Financial Times piece asking if this is the start of a European exceptionalism in markets and then misquoting how markets have performed later in that piece.
It misquoted how markets performed?
Yeah, so they say the MSCI Europe Index is up 9% in the year. It's about right. Compared with the S&P 500's decline of 9%. So, yes, the S&P
it's comparing apples to gorillas.
Yeah, exactly. So, misrepresenting what markets have actually done. U.S. equities are down 4% about year-to-date and down 9% from their peak. So, yes, misrepresenting it a bit. But given the fact that we're seeing this now printed everywhere, it starts to get me concerned that maybe it's overplayed.
Yeah, look, we did this last year with, I think it was last year when the S&P 500 lost money in like its first 3 or 4 days or something. I don't remember if it was last year or 2023, but one of those. And either way, like each of the last 2 years were fantastic for U.S. equities. But nonetheless, you got the pieces printed. Hey, here's what, a bad January or bad start to the year means for stocks. Yeah. And ultimately, I can tell you what it meant for stocks, which was bupkis. Like, it didn't mean anything. So I think that you look at this, and could this be a turning point for how capital performs in the U.S. versus how it performs overseas? Sure, of course it could, but like that could happen anytime that you see things moving one way or another.
And I think sorry, go ahead.
There's also a chance that this is absolutely nothing because Europe has long been plagued by problems of follow through and getting political cooperation across its members and. This is before you even get to the fact that its demographics are significantly worse than ours. Its regulatory structure is more difficult to operate in. Like there are a lot of reasons why U.S. equity growth has been stronger than European equity growth over the last couple of decades, and so. Yeah, like this could be something in the start of some kind of new long-term trend, but 1 month does not prove anything. Like anything in the markets can look good for a month, whether it's like the Long Island blockchain company or whatever the heck, like the newest fad is. It's not to poo-poo what's going on in Europe, but it is to poo-poo what's going on in Europe because you just don't know anything right now.
Right. The only thing that has seemingly changed in Europe today compared to a few months ago was a willingness to spend. Like that's what's changed, right? Germany had that vote, and they are now looking at expanding defense as well as infrastructure spending. That is a meaningful change. But if you think that the majority of the gains that U.S. equities have reached compared to European stocks over the course of the last decade is only because the U.S. government has spent more, then I think you're missing the ball there, right? There's been a different regulatory environment. There's been different innovations that have played out. And so I would, I guess temper some of those expectations. It's not to say that won't be met with the follow-through. But there's a lot more that needs to happen to make Europe a much more desirable place for investment.
If you're looking for the perfect place for your next vacation, well, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Mike, we got a piece of the New York Times. Signs of an office market bottom. Quote, the worst is probably over. Mike, I was told that we were going to have, catastrophe because of the commercial real estate market, and what happened?
The world was going to end.
What happened?
Jamie Dimon said he wanted all of his employees back in the office.
And
then so did, a few other thousand executives.
So I don't know anything about, the ins and outs of what's going on in, the New York real estate market. There's only so many hours in the day. You can't learn everything about everything. I try, but you can't. So you get these pieces here that are talking about, I'll quote, sales of office buildings across the country totaled $64.3 billion last year, up 21% from 2023. So, there's more sales that are going on. In 2024, 6.5 million more square feet of U.S. office was leased than vacated. That's the highest amount in any year since 2019. So, you're seeing some signs there. So, ultimately, and again, I can only tell from what I read. I'm not an expert on this market. It says you still have sales prices that are moving down in order to, get these buildings moving. But
they
overall,
are at least moving.
The claims, that we're going around of, hey, this is going to be this horrible thing. We said at the time, hey, maybe this creates some drag over the next 5 to 7 years, but it's tough to, understand how it becomes a bigger thing. That seems to be what we're seeing here, in that there is no catastrophe that played out. Maybe on a building-by-building level, there are certainly areas that, are harder hit. But as far as the impact on the U.S. economy, have you noticed anything?
Yeah, I think you go back to one big lesson when it comes to sensational stories, like COVID was at the time. Whenever somebody tells you it's going to permanently change the way of life, treat that with a high degree of skepticism.
I remember when we were told we were never going to hug again.
When
I just want to give you a big hug, Mike.
You guys hug?
That wasn't.
I'm a hugger.
That wasn't about COVID. That was a conversation between you and your family way pre-COVID.
I didn't want that to come out.
But yeah, don't buy into the fact that it's different this time. Is my lesson from all this.
Quick break. Hour 2 coming up in just a little bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 of the Financial Exchange, and we got stocks continuing to embark upon a modest rally as we continue through the morning. The Dow Jones Industrial Average up 0.5%, 225 points. S&P 500 up 0.4% or 22 points. And the NASDAQ up 0.5% as well, about 87 points. So some continued green as we continue to digest what we saw from the Federal Reserve yesterday, where they held rates stable. The one change they did announce, their runoff of their balance sheet, they did slow on the Treasury bond side of the equation, down to a $5 billion a month runoff, which, given the overall size of the Treasury market at north of $30 trillion, $5 billion a month is nothing. Like they basically almost stopped it.
Give it to us in English what the runoff of their Treasury portfolio means.
Basically what it means is that rather than them continuing to put an additional, I think they were at $35 billion that they were spinning off, rather than that additional supply coming out into the market each month, there's only going to be an additional $5 billion in supply from the Fed that they are not reabsorbing through future purchases. So
basically bonds mature and they're not buying new ones.
They are buying.
They are buying more
they're
than
buying
they
more
were
new
previously.
ones.
Yeah.
Yep. So, again, I don't know that it makes a huge difference, but whatever. Your mileage may vary. We've got the 10-year U.S. Treasury down 4.2 basis points to 4.214%. Oil, West Texas Intermediate, up 96 cents a barrel to 68.12 cents. AAA national average for gas prices continuing to rise as we see the changeover to the summer blend of gasoline. That now is up to $3.12 1/10 cents. So that has gone up about 5 cents over the last week or so. Nothing else at play aside from that. And, you typically see this as you get into the spring. It is something that is completely normal and not really related to broader oil price moves. Gold up another $7.20 an ounce to a new all-time high, $3,048.40. So continuing to see some upward momentum on that front. And that's what we have moving in markets today. Jensen Huang, the CEO of Nvidia, says they are going to, I'll quote here from the Financial Times, Nvidia will spend hundreds of billions of dollars on chips and other electronics manufactured in the U.S. over the next 4 years as the company tilts its supply chain back from Asia in the face of Donald Trump's tariff threats. Your thoughts, Mike?
Hard to say how real it will end up being. Hard to say how much of this was already planned investment in the United States and how much of it will actually come to fruition. Any of it would be good. It'll mean more jobs for the United States, but I think the problem with chip jobs and semiconductor manufacturing in the United States is not today an issue of companies being unwilling to do so. It is an issue of capacity in the United States and our skill set when it comes to manufacturing semiconductors and all of the other parts along that supply chain. And so don't expect this to be rapid, right? We've been talking about the development of semiconductor manufacturing facilities, for instance, out in Arizona. I bring that one up because every time I go out there, I go for a hike and I can see the sprawling campus of
How
TSMC.
big is it?
I don't even know.
Well, how big does it look? Just tell me, do you see it?
Several football fields.
You see it, and are you like, wow, that's huge?
Yeah, especially because previously, 7 years ago, when I would go for a hike in the same place, you would crest over the mountain and you would see cactus. Cacti. Several cactuses and desert, and that's it. And now it's a sprawling city, and so is the housing out there. So it is pretty shocking to go and see up there in North Phoenix. But that, to me, is the biggest problem with manufacturing of all sorts of supply chains related to the semiconductor space. It's the time it's going to take to get those types of jobs up and running here in the United States. Not a lack of demand on the behalf of companies.
No, speaking of that demand, there's a piece today in TechCrunch with GM. They are, I'll read the quote from Jensen Huang. We're looking forward to building with GM AI in all three areas, talking about factories, robots, and self-driving cars. I don't know why car companies think they're going to start building robots all of a sudden.
I was going to say, does anyone know what that means? GM
No.
teaming up with Nvidia to bring AI to robots, factories, and factories. I guess I can figure that one out well enough.
Quite honestly, I can't. So I'm sorry. I was yelling at Paul yesterday, and it wasn't his fault, because we were talking about how Taco Bell said that they were teaming up with Nvidia to try to bring AI to their order improvement processor, this and that.
Yeah, I saw that.
And I guess what I'm struggling with on this is the whole reason for the hype around AI now is that it's generative. It's like, oh, it can write, it can do stuff, and this and that. And this, to me, is more like, hey, we're just going to be, analyzing our processes better. That was the Taco Bell thing. And I'm like, well, AI's been doing that for a while. It's just not generative AI. So then I see this thing here about, hey, we're going to bring AI to our factories. And I just don't know what that means, quite honestly, because I showed Paul. So I showed Paul something that I was working on the other day where I had a real problem, and this was through ChatGPT. One of the things that I was working on, I was like, okay, show me a comparison of cost of living between Massachusetts and Florida, and walk me through an analysis of how I can make a decision on what someone would do there. And I was using their 4.0 engine, which is, again, it says great for most questions. It's not their most advanced reasoning thing, but okay, it should be fine. I'm asking it to figure out cost of living type stuff. And I'm going to quote here. Florida generally has lower heating costs than Massachusetts, but a person will pay more for air conditioning there in the summer. While groceries and transportation costs may be slightly lower, Florida's higher sales tax at 6% versus Massachusetts at 6.25% could impact overall expenses. And I looked at it and I go, I don't know much math, but I do know that 6% is actually lower than 6.25%.
Sure is.
And so when I have AI failing to differentiate between 6 and 6.25% correctly, I don't really know how you're going to get AI on your factory floor with power tools doing all kinds of crap in any kind of productive way anytime soon.
Maybe General Motors workers on the floor are just a bit lonely and need an AI to talk to?
Furthermore, and I did just say furthermore, Michael. And you know when I say furthermore and Michael in a sentence, I'm really feeling something.
We're ramping up for something here.
Mike, do you know what General Motors' revenue was last year?
No.
$187 billion. Do you know what their profit was?
About 10% of that?
Less. It was about 3% of that, $6 billion. Okay? Does General Motors have a lot of money to spend on AI chips?
Doesn't sound like it.
No, they really don't. Like you talk about like these orders from Microsoft and everything, where they're talking about like $80 billion in capex next year, and most of that's going towards AI. And same for Meta and all these companies. General Motors might be like, yeah, we'll take 3 chips. Like they don't. It could be more than 3, obviously, but they don't have tens of billions of dollars to move. And so this gets to the other thing that I'm wondering about, because for the last 2 years, Mike, did Jensen Huang have to go and like court business?
Nope.
And now we're getting these announcements. We've had 2 in the last 2 days now that like Taco Bell and General Motors are going to start using Nvidia chips.
So, yeah.
Does it kind of like? I'm not saying they're desperate because they're making a boatload of money, but if you're trying to like fuel, if you don't need to do this when you're seeing 200% annual revenue growth.
Yeah, I can't tell if it's an Nvidia desperation or if it's an other business desperation, because either case, it sounds to me like AI washing.
It does.
And if that term isn't familiar to you, think of the days of greenwashing or DEI washing, whatever you want to. There are several different examples of this, but it's the idea that a business is going to say or do something that's not very impactful to be able to claim that they are environmentally friendly, for example, or care about diversity, equity, and inclusion, for an example, when in reality there's not a whole lot going on there. And I do get the sense that we're hearing the same thing from businesses right now in their approach to artificial intelligence. And we saw a lot of that over the course of the last few years. It went quiet for a little bit, and we're seeing a lot more of it just over the last few days here.
Like a quote here from this TechCrunch piece. GM will use NVIDIA Omniverse with Cosmos to train AI manufacturing models to help it build next-generation factories.
Neither NVIDIA nor GM actually know what that means.
Using Omniverse, GM will be able to build a digital twin of its factories, even assembly lines, to virtually test new production processes without disrupting existing vehicle production.
Omniverse, right?
You guys didn't think about how you would try to build factories before you built them previously? Like, I don't know. Maybe there's like some huge thing here and I'm missing it. But gosh, it just feels like there's not much there. I don't know. Again, it's not like GM has this huge amount of money to spend on this stuff. So
it's also not like NVIDIA is the one that is out there developing models for most companies.
Yeah, I don't know what to make of it.
They don't have the experience of building a complex model to evaluate your manufacturing. That's what OpenAI and what other AI companies do, utilizing the infrastructure of NVIDIA.
Well, so here's one thing that I will say is interesting, and maybe this is NVIDIA trying to skate where the puck is going. If they're starting to see their hardware revenue plateauing, getting into consulting arrangements with companies for how to best use their platform and software.
Sure.
Okay, like I buy that as how can we generate revenue once the CapEx boom is off, and maybe that's what they're trying to do, and I think that's a smart plan.
Yeah, you don't want to become a commoditized business where
no, like I do understand. I understand that. Like they don't want to just become the backbone. They want to become someone who's indispensable and has recurring revenue. Like I get that. But how much of it are you going to get from you? You need to build a very different organization than the one you've built so far, which they might be great at doing. Like I don't know, like they might be really good at that too. Let's take a quick break here. When we come back, we'll do a little bit of trivia, And then we'll talk about what the National Association of Home Builders says about where home sales, mortgage rates, and tariff impacts could be going right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bent you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part
by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025. Time for trivia here on the Financial Exchange. As most of you know, the men's NCAA basketball tournament kicks off today when the Creighton Blue Jays take on the Louisville Cardinals right at 12:15. Trivia question today. Which university has won the most men's NCAA basketball tournaments? Once again, which university has won the most men's NCAA basketball tournaments? Be the 9th person today to text us at 617-362-1385 with the correct answer, and you'll get a brand new Financial Exchange Show t-shirt. Once again, the 9th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece in Barron's that is an interview with what's his name, Robert Dietz, the chief economist at the National Association of Home Builders, and goes through a lot of different topics with him. And obviously, look, no one knows exactly what's going to happen with housing this year, but generally when you're, the chief economist at the National Association of Home Builders, you probably know better than we do.
Yeah, I would say that's reasonably fair. So, highlights from his own forecast in the interview. He had previously forecast that home building in the single-family area would be flat in 2025. And I think we're hearing that echoed all over the place, that, in the places that home builders typically like to build, Texas, Florida, to name a few areas, there's a lot of supply and not quite as much rising demand, and so home builders have been slowing down on those fronts and are also a little bit worried about tariffs. I would not discount the effect of tariffs on the price of a home, but I think it might be getting overstated in terms of frustration or difficulty for the home builder. They now have a fair bit of experience in dealing with price uncertainty when it comes to things that go into a home. See COVID.
Sure.
And so I think home builders, if demand is there, are more than prepared to say, yeah, we'll build that home, and here are where we're going to have escalators in certain areas of construction, like lumber, like appliances, if we have to face higher costs on these than we are currently anticipating. So I think there's tariff concern, there is price concern, but I don't think that would prohibit building in any meaningful way if there was actually strong, robust demand in the place that home builders wanted to build.
And I think the two questions that I think are out there that are meaningful. Again, I think you give a good summary of how they can address the price side and even address some of the supply issues potentially. But the demand side is a big one, and specifically demand in the markets where home building has typically been a big thing. Mike, we don't build very many homes here in the Northeast.
No.
We just don't. The vast majority of homes in the United States are built in the southeast and the southwestern part of the country.
Yeah.
That accounts for, the biggest chunk out there. And so if you have questions about being able to build in Florida because of insurance costs and how easily you're going to be able to sell those homes, do builders say, look, this is something that we're not sure of, and we're not sure, what the demand's going to be like because, we're seeing pricing pressure in those areas already. Okay, is that something that we pull back on? That's a demand problem. The other piece that's noted in here is they ask, I'll read the question, deportation of undocumented immigrants has also been a Trump administration priority. Will that affect home building? The response is data from the American Community Survey indicate that about a third of construction workers aren't born in the U.S. It doesn't tell us whether someone is here legally or not, but it suggests there is a potential risk to the construction labor force when we already have a persistent shortage in skilled labor. So being able to complete projects on time, depending on the availability of your labor, is a huge question that I don't think they have an answer to.
Correct. Yeah, and I'll take this a step beyond, illegal versus legal immigration and the people working in the industry, because there's been estimates of, what portion of that labor force is not in the country legally. But even for those who are, as it just mentioned, a third of the workers in this industry were born somewhere else. And so while you might have a valid green card, you likely or quite possibly have family that does not. And if your family is facing deportation or legal ramifications for being in the United States, then you might pack up your tools and go elsewhere as well if your family's, facing that type of threat. And so, yeah, that is one area that hasn't to this point become a real issue, but I think is certainly on the minds of, clearly the chief economist of one of the chief economist of the National Association of Home Builders. So I don't think he would answer that way unless it was a genuine concern.
Markets remain modestly positive with about a 0.5% rise across major indices. Quick break, and then we've got the trivia answer when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income income and expenses, and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, which university has won the most men's NCAA basketball tournaments? That would be UCLA. They've won 11, the most all time, and Kentucky is in second place with 8 wins there. Winner today was Jeremy from Vineyard Haven, Mass, taking home that brand new Financial Exchange Show t-shirt. Congrats there. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, we had a piece in the Wall Street Journal talking about how Florida is considering trying to figure out how to get rid of their property tax system. And I'll read the quotes here. Killing property tax would leave the state more reliant on its sales tax and strip local governments of revenue to fund everything from schools to social services. A full repeal is unlikely soon, but the idea is gaining political traction, reflecting the strain homeowners are under. So here's what I know about taxes. And
everyone wants them lower.
No one wants them higher. Everyone wants them lower. And regardless of where the money comes from, ultimately you're still trying to provide the same services that people expect. Sanitation, sewers, schools, police, firefighters, things that people expect in a functioning city, state, county, whatever division you want to look at.
And one final point on all of that. It is fundamentally different from what you're able to do in the federal government, where you have a printing press. It's a zero-sum game in the state of Florida, just like it is in Massachusetts, New Hampshire, and all the other states. You have bills you need to pay. You need to raise the money from somewhere, and your options are taxes or debt.
And so here's what I know is that you can't just get rid of that vast amount of revenue, because look, if the amount of revenue they're raising is so high that people are complaining about it and you're talking about getting rid of it, then you can't just get rid of it and say, well, we'll figure it out through, reducing, waste and excessive local government spending.
Yeah, in fact,
there's not enough there.
Florida's pretty famous about running a pretty lean government.
It's pretty lean, so I'm just trying to figure. The risk doesn't leave the system, and look, I'm not saying like, hey, raise taxes. Like that's not where I'm going here, but it's much more, hey, as you move, through these different things, you eventually get to a point where you're like, okay, where is the money going to come from to maintain the level of services that we need?
And the only answer for Florida, by the way, because they don't have an income tax, would be sales.
Correct.
And maybe that's, again, maybe...
It's not. So they've ruled in, I'll quote here, in his State of the State speech, DeSantis ruled out raising any other state taxes to replace property taxes.
So, I think, one, that is a huge problem because you have to go somewhere. But for a state like Florida, I can see the desire to say, hey, we're going to push this on sales taxes because I haven't looked at any numbers, but I would imagine in terms of states that receive visitors from out of state per capita, Florida's got to be up there in terms of, vacationing state. Chuck, you were just there. They've got massive theme parks. And so I can see as a resident how you would say, yeah, I'd like to rely on that revenue funding more of my government than my property taxes. But I think they're probably underestimating how much that would need to change. That's kind of my guess.
Yeah, I mean, I don't know. I was trying this morning to find, how many houses, not even single family, but just how many residences exist in Florida. And I was unable to find it. But here's what I do know, is if you look at the population of Florida, it is 24 million people. Mike, is it a fair assessment based on what we see nationally? 2.2 people per household is a good place to...
Sure.
To call it a day.
Yeah.
So whether it's, an apartment or whether it's, a property that's owned by someone, there are property taxes that are paid on it. So let's say that we've got 11 million units in Florida.
Okay.
I'm just spitballing. I don't know.
Got it.
What I do know is the average property taxes in Florida, which came out to about $2,500 last year.
Okay.
It's the average. Obviously, it's higher in coastal communities, lower, in the middle of the state. But that is $27 billion in revenue. Now, $27 billion is a big chunk of change. I don't know how you can just get rid of that and say everything's going to work the same way that it used to.
Yeah, you have to raise elsewhere. That's just the reality of the math.
Again, I'm just trying to sort through this, but it seems challenging. Hey, if they can pull it off and make it work, great, but I don't think you just get rid of $27 billion in municipal revenue and say, well, it'll be fine.
Right. Chuck, it actually reminds me of a conversation I was having with a client just yesterday. It wasn't about Florida, but they're looking at a relocation from New England down to South or North Carolina. And we were kind of trying to talk through that process. And the answer was that they really had no great idea of what their cost of living was going to look like there. But we were able to focus on, hey, these are the properties that we've looked at. And really what a lot of the conversation came down to is, hey, if we're going to make a move like this, what are the tax implications? What if I need to be able to offer cash on my next property because of how competitive the market is? Interestingly, they were going from a highly competitive market where they're selling in New Hampshire to one that's considerably less so in South and North Carolina. They're looking at about 90% of pre-COVID inventories back on the market there. But it was a really common question that we get. I know that you've dealt with this with your own clients too, whether it's completely relocating. In this case, they had a daughter who was potentially thinking about doing the same, whether it's buying a second home in some of these markets or renting to spend part of the year down there. It's a complex series of decisions to go through that affect everything from estate planning all the way through your tax and financial scenarios and borrowing, which we all know those costs are exceedingly high compared to a few years ago. If you're facing that type of decision right now, and I'll be honest, right, there are some pockets of Florida and other typical places that people like to retire to that are looking a lot more attractive than they did over the last few years. We'd love to talk to you about that process and that idea of relocating or spending time elsewhere and just how much focus and planning needs to go into it. We talk with our clients about it at the Armstrong Advisory Group frequently. It's one of those features of the relationship with the financial advisor that goes beyond the investments. And if you have questions like that, we'd, like I said, love to talk to you. The number's 800-393-4001. We offer free consultations in person throughout New England. The number, once again, for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Why uncertainty makes the stock market go haywire. It's the headline in CNBC. And look, it's ultimately two things. The first is that if, we reference, good old friend Larry Kudlow, profits are the mother's milk of stocks. Hey, if you have uncertainty about how likely you are to reach certain levels of profit, that obviously gets, discounted into the market, and so that hurts. The second piece is, hey, then if you see, falling prices of stocks and, you're reading stories and this and that, there's emotion that feeds into that, and so there's a feedback loop that happens. And so ultimately, it's basically, hey, the math plus emotion makes things get a little bit wobbly.
Yeah. It's not that much more complex than that. I mean, on one hand, uncertainty is always there in markets, and I think you have to acknowledge that. Like, people tend to ignore that. Like, no, there's always uncertainty. We never know what Nvidia's earnings are going to look like next week. But when you add in a higher degree of that uncertainty around, hey, I don't know where tax rates or tariff rates are going to look like what they are going to look like, and I don't know what government spending is going to look like over the course of the next few years, and there's an off chance it could look dramatically different than it has previously, that's where uncertainty starts to play into all of this.
Let's take a quick break here. When we come back, we'll do a little bit of Stack Roulette.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mike, what do you got for me for Stack Roulette?
Some Logan Airport news. Massport is upping the fee for rideshare companies to drop off and pick up passengers at Logan Airport. They'll be bumping that up to $5.50 each way. I think it was around $3 or thereabouts previously. I generally don't really have much of an issue with this. It is not convenient to get to Logan Airport via train, which is problematic, but there are other methods to get there. There's plenty of shuttles and other options to get there, and if they can improve those services to get cars out of those tunnels and make it faster to get to and from there, I'm kind of all on board. The one issue that I do have with it that just doesn't make any sense to me is the fee now for taxi cabs to pick up and deliver passengers is going to be a full $2 cheaper than rideshare apps. And I just don't see the difference.
Like, you don't think that's a big enough difference?
No, I think they should be the exact same.
Oh, gotcha.
I don't see why it would be significantly cheaper for a taxi cab to pick up a passenger and deliver them back to their home than it would be a rideshare.
There should be no reason.
Yeah, and I'm sure it's purely because negotiating with the taxi cab unions and industry is a little bit more difficult to do than the ride-sharing industry, but it is a substantial difference. It's $5.50 each way under a rideshare. On the taxi cab side of things, I think it's only $3.25, and it's only when dropping off a passenger, not when picking one up.
I want to talk a little bit about March Madness, which kicks off in, is it 25 minutes, Tucker?
12:15 tip.
25 minutes to go until the first game kicks off. And there's a piece here titled, Does College Basketball Have a Gambling Problem? It should be retitled, College Basketball Has a Gambling Problem. And by the way, it's not just college basketball. It is all of American sports, including, if you want to hear the most disturbing thing, it's down to like the high school and in some cases the middle school level. And this is like, it's, I gotta say.
What do you mean middle school?
There are like cases that have come out of illegal gambling on middle school basketball games and football games and stuff.
I didn't even know those lines existed.
Tucker, I don't either. I'll see
look
if I can
around
pull
for
some
them.
of the story. I'll see if I can. I said illegal, Tucker.
Oh, sorry.
I'll see if I can pull some of the stories on it. But like, it's popped up at this point just because. Honestly, how long has sports gambling been legalized in the U.S.? 5 years.
Somewhere in that range, sure.
Anywhere between like 4 and 7 years. I got to admit, the further we've gone on, I'm not sure we're ready for it. I'm not sure we are. And it's not like, I'm not trying to be paternalistic because honestly, it's your money. Whether you lose it gambling or spend it on a boat, it's not your money anymore. Like you've spent it. Like that's fine. Like we all do, kind of silly things in the for entertainment. And for me to like have some, holier than thou attitude that like thou shalt not gamble, like no, like it's not that. It's much more that I think it's actually starting to like create a further strain on the fabric of society. And this piece like has one thing that I'll say here. NCAA President Charlie Baker, former Massachusetts governor, says college athletes have told him they have been pressured by classmates or family members to manipulate their performance, including for minutiae such as not taking the first shot or missing a couple of free throws.
That's crazy.
Guys, when you are telling a human being to change what they are doing so you can make more money on a gambling app, you're doing it wrong.
Well, also, like, that's illegal and you should
forget the legality of it.
Yeah, it's
Mike,
wrong.
This is tearing at the social fabric of what actually allows people to have, like, commonality and build trust amongst each other.
Yeah.
And I'm just not sure that we can handle this. And quite honestly, where we're going with so many different places in society right now is just whatever gives me the biggest dopamine rush is what I'm going to flock to, which is why you're seeing, it's just this gambling impulse, not just on sports, but you see it in financial markets. You see it in all different places that are basically like building this into how they are operating now. And I think we're broken. I think we are very, very broken, and I'm not sure that we can handle this.
Well, what's the one constant in all of this?
Us.
Young men.
The phone.
Yeah,
no, it's the phone.
The phone and young men. Those are the two things.
Yeah.
Like, if you talk to any gamblers' help association, it's like 90. Men. It's 99% men.
Yeah, it's
and I don't know how we are going to fix this. The easiest way would be, fine, you can have legalized sports gambling. You can't do it on the phone.
The one area that I have seen it start creeping into that does concern me that you mentioned, Chuck, is financial markets. And I think that there was a platform, it might have even been Robinhood, but don't quote me on that, that was talking about allowing you to basically gamble on sports within an investment account. And while I can understand how that seems convenient, that is very, very dangerous. And I think gets into a group of people who are coming up right now who will not be able to tell the difference between an investment and gambling. If you allow those things to commingle, then you have a very serious future problem here where there are plenty of people listening right now who have a lot of faith in the idea that the U.S. stock market over 10, 20, 30-year time periods will appreciate. If that gets mixed up with how gambling performs over a 10, 20, and 30-year time period, then we have a real problem with kind of how society functions in the United States, how capitalism functions in the United States.
So I think we've got a real issue here. And
my problem is that I'm when it comes to all sorts of stuff like this, like physically addictive stuff like gambling or psychologically addicting stuff like gambling or drugs, I've always been very much of the opinion that legalize it, tax it, and let people do what they want. And I'm with you. We're starting to see some of the effects of that here.
We're kind of broken on the gambling stuff. And again, I'm not of the opinion, like, get rid of it. But we have to figure out how to be able to live with it. Otherwise, I don't know what you do. Like, if you are telling someone who's a college basketball player, hey, can you miss a shot for me tonight? Like, how little do you respect their life? Like, sacrifice your performance so that I can do better. Like, what are we talking about here? How awful is that?
I guess it's better than do that or I'm going to break your kneecaps.
Were there lots of stories of that when, like, sports betting was illegal?
No,
there weren't.
Right. I'm setting a pretty low bar.
I don't know where to go with this, but this is bad. And it's not bad. It's not because of the financial aspect. Like, that's what I'm trying to say. Like, the financial aspect, whether you spend your money gambling or on, a couple beers watching a game, whatever. But the societal piece and how it's tearing at some of those threads, does not feel good to me. Markets remain modestly positive, and we'll see where we go the rest of the day. We'll finish up the week tomorrow on the Financial Exchange.